You've probably heard a lot about trend trading, but what is counter-trend trading? Our guest today is Rob Booker here to talk about that. Rob, thanks for being here.
Hi, Tim. Good to be here.
Well, what is counter-trend trading?
Well, what is a trend or a counter-trend in the first place? I hear so often people say that the trend is your friend and don't bet against it, and once you identify the trend, you wait for pullbacks, and there's all this language that's undefined. And what's a trend on the daily chart isn't always necessarily the same trend on the 1 hour chart. So my first question is always, trending and counter-trending are terminologies or terms that are so difficult to nail down. But typically what I mean are whenever a significant move happens on the same day in any major currency, 100, 150 to 200 points in one single direction after a news release or after an unexpected economic catastrophe or event, I look to fade that move. I look for signs that that move is going to reverse, which it doesn't always do, but I'm looking to go against that move.
What are some of those signs that you're looking for?
Well, I can't tell you. You'd have to pay me. No, I'm just kidding. Those signs are actually a lot easier to figure out than most people probably give themselves credit for. You can look at candle patterns. Steve Nissen has a ton of things out there that you can look for. There's tons of information on the web about basic support and resistance. But the primary methodology that I use is pivots. I use pivots and R3 and S3 levels. Those are resistance number 3 and support number 3. And when a currency pair on any given day reaches out to those levels, that's when I start to set up trades that go in the opposite direction.
And how often do these come about?
3 to 4 times a week on some currency pairs like the pound yen, which I call the Orient Express, right? It's the currency pair that likes to smoke crack on, most every weekday, and it goes out of control. So most of the time, it's those major volatile pairs, the euro yen, the pound Swiss, because they can set up trades on a very regular basis, and they can snap back and forth quite fast. The euro dollar, the Australian dollar, some of those slower moving currency pairs, they really don't set up that many trades.
And could this strategy be the entire strategy for all of your trading? Do you have to be patient and wait for these trades and just trade 3 or 4 times a week?
I wouldn't call myself the most patient trader in the world, but when it comes to waiting for that particular type of setup, I do have to be patient. So I'll go into my trading platform or charting platform, and I'll set up alarms that are delivered to my cell phone. And those alarms, once delivered to my cell phone, alert me that a currency pair has reached those extreme levels and is ready for a pullback. And then I'll find my way to a computer or use my phone or my iPad, log in remotely, set up the trade, and then I got to leave it alone.
A lot of the traders, I think, seem to feel like they need to catch that explosive move rather than the counter trend of it.
Right.
Why are they doing that? Why are they doing the opposite of what you should be doing?
Well, as long as they're making money doing it, sounds fantastic to me, but I've always been terrible because immediately when into a trade like that, I start to worry that it's already extended outside its average daily range, or it's already extended outside the range of what's usually possible. So I'm interested in the opposite end of the coin. When something statistically unlikely has occurred, can I catch just a small bit of the return trip? Because even in a trend, there are impulse and corrective waves. And I don't even want the full corrective wave. I just want a small piece of that correction. And then I'll let those trend traders do whatever magic they can do and stay in those trades for as long as they possibly can.
Rob, thanks for your time.
Thanks, Tim.